evening, everybody. Appreciate you actually having taking the time to listen to Wentworth Resources this evening, as well as some other interesting opportunities. Just draw your attention to the disclaimer. I appreciate there's a lot to read here, but you will receive a copy of this presentation from Shares following this evening's session. Before I start going through the presentation, I just wanted to outline a brief agenda just to give a bit of structure to my presentation this evening. I want to give obviously a company overview for those of you who are not familiar with Wentworth, what it means to be involved in Tanzania's energy landscape. I feel that's really important as an education piece around Tanzania, and really why we're excited about the medium long-term opportunities of working in this country. Why Wentworth is well placed to take advantages of those medium long-term opportunities, and why we have a really robust business model, even more so as we've seen some of the challenges that we've all faced this year with the global pandemic. And then finally, why that delivers a very strong and sustainable outlook for our business. So just to introduce myself and the rest of my fellow directors, I'm Katherine Rowe. I'm the Chief Executive Officer of Wentworth. I've been involved with the business for 6.5 years. These are my fellow directors on our PLC board. We are AIM listed, and we have a wealth of experience on our board that ranges across a number of different jurisdictions, but quite a lot of Africa experience here amongst all of us. And a lot of experience in the upstream oil and gas sector, and particularly in the public markets. So who are we? Who is Wentworth? We are a natural gas producer in Tanzania, and we're one of the leading natural gas producers. So we do have a core producing asset onshore in the southern part of Tanzania at a beautiful place called Mnazi Bay. It's just towards the border with Mozambique. This asset has been producing in a material sense for 5 years now. We produce into the fairly new natural gas infrastructure pipeline that runs all the way from our field up to the commercial capital of Tanzania, Dar es Salaam. And I'll come back to that later about how important that infrastructure is. So we play a critical role in increasing the energy access in the country. Tanzania is a growing, very fast growing in terms of population and a young demographic, and looking to grow the country economically in the next decade or two. In order to do that, at the absolute heart of any economic development in the emerging world is the ability to have low cost, reliable power, and that is at the heart of what we help to achieve alongside the government of Tanzania. We're fortunate that our asset is very sound, very robust, and performs very well. We have 5 wells in the field, and since material production started, we've been able to maintain a very steady and robust operation. And it's really the performance of the asset and the commercial framework that sits around that asset that allows us to be financially robust. And we really demonstrated that in 2019 with the launch of our dividend policy. So we set in place a sustainable long-term dividend policy paid biannually, and we've made 3 payments since we launched that policy, and we've increased the dividend by 20%, even against the challenging backdrop of COVID this year. Another reason why we're able to do that is because we have long-term fixed gas prices, so we haven't been susceptible to commodity price volatility that we've seen earlier this year. We don't have any debt, so we have no debt to service. and we also have a very limited work program in 2020. So we were one of very few E&P companies that did not need to make any changes to our work program, no capex cuts, no dividend cuts, and no difficulties with having to renegotiate any debt facilities. So we're very well shielded, we're very robust and resilient. Our guidance that you see there in the bottom left box of 60 to 70, that is our average production guidance for this year. We are comfortably sitting within that range. I've talked about the dividend, but the yield is fairly impressive for a small single asset business like ours. We are debt free and we are building cash, and we reported that we had just under $17 million of cash with our interim results, which represents about 50% of our current market cap. And you can see our reserves there, our 1p, 2p, 3p, look very healthy relative to where we currently trade. Very brief overview here for the public markets. We have a market cap of just over £30 million. The share price chart here is really to just try to underpin and quantify that resilient, robust nature, given the difficult months of February, March, and April, particularly in our sector, and particularly in a broader sense as we see energy transition a key theme for how we come through this pandemic and how we shape the future for all of us. We have now obviously been fairly tracking that AIM oil and gas index, but certainly outperforming when crisis hit many companies in our sector. The other point worth noting is that for a small company like ourselves, we have very impressive shareholders in terms of institutional shareholders. Obviously, we have a large degree of retail in our register as well, as you can see there. But those institutional shareholders have been with us for many, many years. A couple of them have been with us since inception. So there's very long-term support. And obviously, part of the dividend policy is just to give back that support whilst we look to achieve capital growth with this business moving forward as well. So I just want to spend a couple of moments talking about Tanzania. I think it's really important to understand the specific dynamics of Tanzania. Some of you may have experience in Africa, and Africa countries are all different, all have their own sets of challenges and opportunities, and they certainly shouldn't be grouped together. And it's important to just understand a little bit that's pertinent to Tanzania. Tanzania has its own challenges, but it has a huge amount of opportunity, and that's what delivers us an incredibly impressive business, but also allows us to look forward to growth in the future. So I give you this slide really just as a bit of a scene setter, just to give you an overview of our peers in country. It is a small group of peers. There are only 3 of us that are currently producing gas for natural domestic power generation today. There are only 2 producing fields onshore for that domestic gas production. It's the Songa field and it's Mnazi Bay. Our asset is in Mnazi Bay, and we are partnered up with Morel & Prom, our operator. We are, again, uniquely positioned because our other partner in that JV is TPDC. TPDC is Tanzania Petroleum Development Corporation. They are the country's national oil company, and they are our entire off-taker for our gas as well. We are the only concession that has TPDC as a partner, and that really lends itself to this partnership model that we pride ourselves on, the strength of the relationships we have with the government, and just how aligned we are with the government in their ambitions to achieve higher access to power for the citizens of the country. So we and Morel & Prom, you can see there, we're pretty equal market share with Orca, who is the operator of Songa. We both have sort of circa 40% of the market share. So we are basically the 2 sort of leading producers and suppliers of natural gas in country today. You then have the explorers. Some of you may be familiar with these, Aminex and Sirocco, formerly Solo, London-listed explorers in Tanzania, and just recently Ara Petroleum farmed into that Rovuma block with Aminex and Sirocco, and that block is adjacent to our Manazi Bay, so it's interesting to learn what they will do next, and what they will do next is really an appraisal and development program to look to develop some of the gas that's been found in that Rovuma. So that's the lay of the land today. It is a small group of companies, and clearly we are well placed to take advantage of the growing demand that we see coming, which I'll come on to. One point just on this is the red line that you see from Manazi Bay all the way up to Dar es Salaam. That is the brand new natural gas infrastructure pipeline that was commissioned in 2015, and that represents the largest natural gas infrastructure project in the whole of East Africa. So it speaks to Tanzania's ambitions and their dedication to increasing the access of low-cost, reliable power through natural gas in the country. The demand growth is coming, we believe. Again, this is the real opportunity for Wentworth and the other current producer in country. That current access rate is still very low. There's still 7.7 million households without access to power. And that's pretty low even in the East Africa region, particularly compared with some immediate neighbours such as Kenya. So the government is fully aligned with this. It's at the top of the political agenda. It's about increasing access to power for all the people. And by all the people, that means not just in the cities, not just in Dar es Salaam or Dodoma, but very much in the rural areas where typically large poverty is really experienced. There hasn't made it a target of universal access within the next 10 years. And with that comes the infrastructure that's required. So not just the pipeline that I've mentioned, but also power stations. There's a huge development just outside Dar es Salaam of a new power station complex. But even more so with distribution, with transmission, with grid expansion to enable that power to be evacuated. So the government has a strong handle on all this required infrastructure to enable this gas right from the south in our field to actually reach all of the rural villages across the country. It's impossible to talk about any business, I think, today without acknowledging the impact of COVID-19. It's fundamentally changed the way we look at a lot of things. But surprisingly for us, our business remains very resilient, even despite such a global economic shock. And this is really demonstrated, I think, on some of these statistics on the right-hand side here, where you can see that GDP growth for Tanzania was relatively high in East Africa, towards the top. And has only been affected from 6.4% projected to 5.2% as a result of COVID-19. So actually, it's very much business as usual in terms of Tanzania looking to develop its economy, despite what we've seen this year. And where does gas fit in to this growing demand? Yes, that there clearly is a need to grow access to power. To give you an idea, Tanzania currently survives on around 1,500 megawatts of power, which is very little. And its near-term objective is to reach 5,000 megawatts of power by 2025. And we want to work with the government to be part of that solution. Tanzania is a very, very environmentally aware country. For a developing country, they're very environmentally conscious, much more so than some of the neighbouring countries. And hydropower has and always will be an important part of the energy mix, alongside some other zero carbon technologies that you might expect to see, such as wind or solar or geothermal. But there does need to be a base load provided for and that's where natural gas really becomes not only the transition fuel to help that access to power, but also to sit alongside quite nicely those lower carbon technologies. And as you can see from the top bar, Wentworth, Moran, Prom and Orca, the three producers I mentioned, are really taking all of that market share, being the only producers today. There is a little bit of oil and diesel used as backup. Just to give you another statistic to underpin what this means to people living in Tanzania, typically you can generate power from natural gas at 5 cents a kilowatt hour. It's more like 25 cents a kilowatt hour for diesel-based generation, which obviously we are looking to displace with our natural gas. So where does Wentworth fit into all of this? Hopefully I've given you a very short, brief, I realise, summary of the macro landscape in Tanzania, but where does Wentworth fit into this? We've talked about our sustainable business model, how we've got fixed gas price contracts, and obviously that shields us from this commodity price volatility. And obviously there's a very strong macroeconomic outlook that's underpinned by some of the statistics that we reference here. We are a Tanzania business and we're Tanzania focused, and we are committed to helping the country grow. We want to be a part of that, obviously whilst recognising that we want to deliver returns to our shareholders in parallel. We do believe that growth is coming, and we do believe that natural gas will sit alongside and be a fundamental part of that energy mix. We are currently producing today around 70–80% of our capacity, of our supply capability, by which I mean we have the ability to supply just over 100 million cubic feet per day of gas without any additional work in our field. We have 5 wells in the field, and we are capable of supplying around 20% more than we currently are without any additional investment. And that's a very nice place to be, partly because we've already made the investment into the field, but also because we see real line of sight on where that extra incremental demand will come from. And sort of the fourth bullet down on that operational delivery piece there, where we talk about Kinyeri 81 power station extension, that is where we see the very near-term upside coming, probably early this year now. We expected that late this year, but I think it's been delayed, really as a knock-on of some of that industrial decreased demand that we've seen as a result of COVID-19. So there's very near-term, tangible line of sight to incremental volume increase for us in the near term. We've talked about being a transition fuel and working alongside, and we've talked about how we really are committed to underpinning the social and positive social impacts that we can make in Tanzania. It's really, really important to us that we can support the government across a whole range of ways. Job creation in our team. Most of our team are in Tanzania. We only have one member of our team in Tanzania that is not a Tanzania national, and many of our people have been with us for 10 years. So we've been able to nurture, educate, help, and grow their skills. So we are here as a long-term sustainable partner for the government in Tanzania. Yeah, sure, no problem. I think this slide here speaks to itself. So I don't think that does need much explanation. I think the overriding point here is that everything's going, the direction of travel is in the right way for every fundamental. A lot of this we've also talked about. I think just to reiterate that we have returned $4.2 million to shareholders in 11 months since we started our dividend policy. It's pretty unique. Dividend is a differentiator for us. We are one of only 3 AIM-listed companies in this sector paying a dividend, and we've increased it rather than cut it this year, which again is, we think, fairly key to us. So we do have a strong and sustainable outlook. I covered a lot of this already. So just to leave you with our ambitions, it's important to us that we are financially disciplined. We try to demonstrate that through reducing G&A this year, returning capital to shareholders. We are looking to grow production, near-term opportunity I've just mentioned with the Kinneresi, and we will only look at growth in a responsible way. We've come a long way to make this business as strong as it is, so we won't jeopardize that. And so that is the end of my presentation. Roland, thank you.
Thank you very much indeed, Katherine. Okay, moving straight on then. You mentioned Kinneresi. When do you expect the Kinneresi extension project will be completed? And has Tenesco already appointed a new construction company after bankruptcy of Jacobson Electro?
So timing is always hard to predict entirely, but we do think that it'll start being commissioned in the new year. So yes, it is at the point, it's fully constructed. So that's the good news. It is fully constructed despite the financial difficulties of the constructor, as you identify. But we do see that I was there in March. It is fully ready to go. It just needs to be commissioned. As you probably know, commissioning takes time. It doesn't start with sort of 20 million cubic feet per day. It'll ramp up slowly. So if we start seeing that early in the new year, that will be a positive.
There's quite a few comments about some of the other, you mentioned them yourselves, the other AIM listed companies in the region, Aminex and what was Solo, and any rationale for a coming together of organisations. You've got a lot of cash there on the balance sheet. Any appetite for corporate transactions or some sort of arrangements with those peers?
We all know each other very well because we're a small group. So as you'd expect, we all know each other incredibly well, and we talk to each other all the time, and we discuss and share ideas. But fundamentally, any opportunity like that has to be done at the right time with the right set of circumstances, and what shareholders are looking for. So difficult one to answer, really, more so than that.
Okay. In the first 6 months of the year, Wentworth achieved a net profit of about $1 million US. How are you going to increase that if gas production is flat? Or alternatively, what I think you mentioned some cost savings. Are there any plans to reduce costs further?
Yeah, it's a good question. So our OPEX, our operating expenses in the field are largely fixed, which is great in some respects, because obviously as production volumes increase, our OPEX per MCF decreases. So our costs are fairly fixed, so they can't also go the other way. What we can control are our corporate costs. And so obviously, as I mentioned before, you'll see G&A coming out, our corporate costs, both in the Dar es Salaam office and also the costs we incur here as a PLC will be lower this year than you will have seen in historical years. So that's the piece we can control. We can't control the speed at which demand growth comes entirely, but we know it's coming, and it's a medium long-term trajectory. So we've already seen industrial demand pick up in the last few months as a result of COVID-19. Actually, Tanzania has dealt with the pandemic incredibly well. There's been very little disruption, although there was obviously an impact, particularly from the tourism sector. So we're seeing that pick up now. So I'd like to think that we see volumes picking up next year as well, which has an impact on our profit and our revenue, obviously.
Final question. What is the capacity of the pipeline as compared to the growth expected in supply?
Well, that's a very good question too. So the pipeline is huge, 36-inch pipeline, capacity of around 780 million cubic feet per day. So large amount of capacity. I think we're looking at sort of supplying 15% into that pipeline at the moment. So it's going to be a very long time before that pipeline reaches capacity. And undoubtedly demand will overtake before we're able to fully supply that pipeline, which is a great opportunity in a way to have such near field brand new infrastructure with plenty of spare capacity and growing demand at the other end and regular payments. There really isn't anything not to like.
On that note, Katherine, thank you very much indeed for joining us this evening.